Groups of protesters have swarmed the headquarters of a massive Shenzhen real estate developer. Over 1 million Chinese people bought and paid for homes that might never be built. Not great. Is this going to impact you or your investments? Time to think like an investor. You know, there's an old parable that goes, if you owe the bank $1 million, that's your problem. If you owe the bank $10 million, that's the bank's problem. But now, if you owe the banks $100 billion, that might be the entire world's problem. And that's kind of the story that was coming out of China now that might have implications for the entire global economy and stock market. A massive Chinese real estate developer called Evergrande, which actually does more in revenue than a company like Facebook. That's how big it is. This is a Fortune 500 company, has all of a sudden found itself in a massive debt problem. And this already comes on the back of news previously in the year that it was starting to have some struggles. But this company, over the past year to date, has lost $170 billion in value and is now only worth $30 billion, whereas before it was worth about $200 billion. So what the heck is going on with Evergrande, and how is this story going to have repercussions for investment portfolios over in North America? Now, firstly, before I get into the story, the likes of people such as Jim Cramer and other television hosts say that, this isn't going to have contagion. It's not going to move to North America. But, they've been wrong about debt crises before.
Should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no.
So what went so wrong with Evergrande? Well, we have to understand a little bit more about the real estate development business, and particularly in China, okay? So when we think about building homes, you can imagine that this is a business that requires a lot of upfront costs. I mean, you have to build a condo building, you have to build physical buildings, that costs a lot of money. And the only inflows of cash you really have are deposits that clients or customers put down. So what you can sense is that there's a lot of money going out on these projects and not a ton coming in until the client has taken possession of their house. So this raises the question, how do you actually fund expansion and continue to get as large as Evergrande did if you don't have a ton of money coming in, but you have a lot of money going out all the time? And the answer is debt.
Because I have $30,000 in credit card debt.
You use leverage, you go to the big banks in your country, and you show them, hey, real estate markets keep going up and up and up. We've been profitable forever. Keep giving us loans because we know that the Chinese economy is growing like crazy. Housing prices are always going up. Our population is growing, and we know that real estate is going to do well. So continue to loan us money. We'll continue to take deposits, and we're going to build enough housing for everybody in the country. But what this ultimately amounted to is just amassing way too much debt. Here's a crazy number. Evergrande has over $100 billion in debt, and they also have $300 billion in total liabilities. And what that means is they're on the hook for $300 billion worth of maybe pension payments and houses and things they don't really have money for, but $100 billion is actually creating interest that they have to pay over time. Now, in addition to this, where we get some eerily similar events to what happened in the financial crisis of 2008 over here in North America, we have a situation where Evergrande was actually kind of, in a weird way, overcutting the market, where they would pay way more than property was worth because they knew at the end of the day, it didn't matter how much they paid for land and for property because they could always sell it at a higher and higher price. And eventually, they weren't the ones bearing the risk because they would build the building and the bank would finance it. So eventually they would pass that risk on to somebody else, and it didn't necessarily matter how much they were paying for property, provided they could continue to get more and more loans to fund expansion. Now, if you know anything about 2008 and how the banks were taking on all sorts of mortgages from terrible borrowers just so that they could pass that on to investors, you have this process of securitization where you take a lot of risk and pass it on to other people. And that can be good because it allows for some financial innovation, but usually it ends terribly because you take all sorts of risk and just throw it onto somebody else. Now, this whole process, as you can imagine, is very fragile, but it works extraordinarily well where you're in a real estate market that keeps going up and up and up, and interest rates are extremely low. In these sorts of environments, you can kind of get away with that sort of thing. But if the growth slows down, or if all of a sudden you can't get more loans, you're kind of in a pickle, because how are you going to finance those interest payments that keep coming out? You have a bunch of properties being developed, you need to take on more loans to continue to keep this machine running. You have interest payments that are getting ever larger, but you need to take out more debt to fund the interest payments. You kind of see how maybe this is like a snake eating its own tail. Eventually it's just going to devour itself. Well, we can all see where this is going, right?
I declare bankruptcy!
Evergrande earlier this week actually missed their first debt payment after several months ago informing the Bank of China and their authorities that they actually might pose a systemic threat to all of China for the amount of debt they might not be able to repay back. And some of the craziest things Evergrande has been doing to try to get back on the right side of fate is things like forcing their employees to loan them money or else they're not going to give them their bonuses, or leaving 1 million Chinese people without a home that they've already paid for, or actually not even paying their pensioners who retired with Evergrande and not paying out their retirement benefits because they need to keep the money on hand. So now none of this is great because China is faced with a terrible task. I mean, you have the Communist Party of China, who isn't all too excited about capitalism other than the fact that it brings a lot of people out of poverty, and now they have this massive capitalist issue where a huge company is going bankrupt. And if you're not really sure about economic history, one of the major reasons that people maybe don't like capitalism and start to be more and more persuaded by things like socialism or communism is because the boom and bust cycles. So now you have China sitting there, tapping its feet, pissed off by the fact that there's this massive economic cycle that has hit them in the wrong way at the worst of times, just as they're coming out of the massive economic recession that was caused by a pandemic. So now China is faced with a terrible decision they have to make. Do they bail out this company and provide government funds to keep this capitalist institution growing? Or do they let the company fail and maybe create factors through the entire economy? So you might be thinking to yourself, I'm here in North America, I haven't even heard of this news story yet. Why is it that this company over in China can affect me and my portfolio and my investments? Well, what we found is that over time, China is becoming a larger and larger and larger player in global trade, and our economy as a whole is becoming much more what we call globalized. There's much less restrictions between borders and there's a lot of trade between different countries. You have China, which is now a massive trade partner with many other different countries, which is all of a sudden in a very bad spot in their debt position. Maybe now their currency will be devalued again, and many of the people who own Chinese investments, like stocks and bonds and Chinese currency, are going to get hurt very badly by this whole thing. A lot of people who do business with China, whether it's different resource companies, etc., banks, whoever operates in China, might feel the effects of this. And lately, more and more and more people are doing business with China. So what's the moral of the story and what here is to expect of all this? Well, first thing that comes to my mind is the fact that history kind of repeats. We see a much smaller scale situation of the same kind of process that happened in America in the 2008 financial crisis, happening again under the same incentive structure in China, where real estate development companies were taking on massive leverage and passing that risk off to somebody else. What does it mean for you? It means that you probably need to start expecting a lot more volatility in your investment portfolio over the coming weeks and months, and you should definitely be keeping an eye on the China situation for how it might impact you and your investments. Anyways, guys, I hope this was a good primer with what's going on with Evergrande. It's going to be a big story that continues to emerge over time, and it might send little ripples throughout the entire economy that we're going to feel in our portfolio. So if you got any value out of this video whatsoever, make sure to hit that like button, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.